Moving on and talking once again about the markets, we're being joined by Himanshu Srivastava of Morningstar Advisers India. Himanshu, hi, good afternoon and welcome on board. The FIIs have been pouring investments into the Indian equity market. What is the driving force behind the sort of confidence that we're witnessing from foreign managers, foreign investors at large?
So FIIs have been investing into the Indian market since February this year. So if you see the first quarter of this calendar year, FIIs bought net assets worth 6.7 billion US dollar, which is the highest quarterly net inflow after March 2013 when they pumped in around 10 billion US dollar. Now this is a very contrasting trend compared to what we have seen in the past, or maybe a couple of months back when in January FIIs were net sellers. Now, the change in trend could largely be attributed to the improvement in the global liquidity situation, which arose after US Fed decided to pause on its interest rate cycle, which was followed by other central banks like Europe and China. There is expectation of a positive outcome of trade talks between US and China that also increased risk-on sentiments, and that is where FIIs got more comfortable with emerging markets, and that is where they are investing. From the Indian perspective, there were certain concerns which were there, but after the elevation of those and expectation of an improving macro and formation of a stable government at the center, FIIs got more comfortable with the Indian markets as well, and that's where we are seeing more inflows coming from FIIs. Now, this trend emerged in the month of February as well as in the month of March, and it continues in the month of April as well. So this year so far, FIIs have invested around 9.8 billion US dollar into the Indian markets, which is a good number, and I expect this to continue for some more time.
What is it that is making you believe that the trend is going to continue? What are the triggers that you're identifying?
So one of the things that we have to understand here is it's more of a global trend than domestic. Now, what we have seen in 2018, emerging markets were not doing really well. But this year saw a correction rally in the emerging markets. In fact, India was doing well in 2008 compared to 2018 compared to other emerging markets. Now, this year when we see a rally into the markets, and that is where FIIs have been investing into the emerging markets, India is getting its share. So if we anticipate a scenario where the dovish sentiments that is being adopted by the central banks, if that they continue, so we are seeing in a scenario wherein there will be a steady flow of inflows into the emerging market, and India will get a share of that. The only concerning part here is on the domestic front, we are still in the election year. The election is happening and the results will be out on May 23rd. So that could be a spoil sport if there's some unexpected event happened or the unexpected outcome from the election. Otherwise, we think that if this scenario continues, we may get more inflows into the Indian markets.
Okay. How about the trend in India focused offshore funds and the ETF space? How has that shaped up?
So India focused offshore funds continue to witness net outflows. However, the situation is much better now. The quantum of net outflows has come down significantly. In fact, if we take into account the provisional figure that is available for the month of April, India focused offshore ETF has so far witnessed a net inflow of 44 million US dollar. Obviously, it's a provisional figure, it may change, but this is in line with the trend that we are seeing broadly in the markets. So again, India focused offshore fund is largely linked to the domestic sentiments, because this is that flow which is coming directly into the Indian market, and there is no other country which is participating in this. So if there is again something unexpected happening on the election front or on the macro front, we may see a bit of a concern here. But if in an event which is positive, then we can see this net outflow converting into net inflow.
Okay. Going ahead, I mean, you just spoke to us about the election being a huge trigger, a huge event to watch out for with respect to the overall sentiment about investing in India. But going forward, over a slightly medium to longer term picture, what are going to be the factors that could largely determine the FII trend?
Right. So I think we are in a very tricky scenario. We are seeing central banks across the globe adopting a dovish stance on interest rates. Now, if for instance a US Fed cuts rates and other central banks follow suit, then we are in a scenario where we will see steady inflow into the markets. But then election is definitely can play a spoil sport if there is something which is unexpected coming out. Maybe a hung parliament, maybe no party getting a majority in the parliament. So these are scenarios which are really concerning. But as far as global sentiments are concerned, they are positive. The domestic sentiment may play spoil sport if they are against what is being expected out of them.
Himanshu, great chatting with you as always. Thank you for sharing in your perspective and setting a sort of a picture in front of us with respect to the FII trend that's likely to play out over the next couple of months and quarters.